You've been hearing from us that the market is picking up, and now some news outlets are also reporting it recently. But with the holidays coming up, things are clearly slowing down on a seasonal basis right now. Many of our buy-side clients are going away for the holidays, and so they will take a pause over the coming weeks. And for buyers who are still actively searching, it's also going to be slower for them too because sellers are also winding down for the holidays. And so if you have been looking at the market, it's still going to look pretty slow these days. But the reality is that the macro market is improving, and we're probably going to see more signs of a visible recovery by next year. But here's another thing. Even though investors are coming back, preferences are changing and actually becoming more similar. I drilled down into our smaller investor submarket to see if I can find more hints about improving market conditions, and I actually found 3. So in this video, let's dive into this. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. The first sign is days on market. Now, days on market is less reliable in hot markets because agents can hold out during hot markets, put out an offer date a week out, hoping for a bidding war, and refuse preemptive offers. So they end up typically bottoming out at around 7 days, and it gets harder to sense how hot a market is beyond that. However, because we are no longer in a seller's market, there's less market manipulation and more organic activity. So now days on market make a much better indicator of where the market is at. And if this number comes down, it's a good sign that things are improving. We talked about investors having more specific requirements for investment properties, and so I narrowed it down to semis in Toronto in our typical investment pockets. Just to give you more color, the reason semis in Toronto make good investment properties is because the actual building and rents might be similar to a 2-story detached home, but you end up getting it for a cheaper price because the lot is smaller and you're attached to a neighbor. So that's why cash flows end up being much better on semis. You can also look at it another way by comparing other opportunities at a similar price. For example, a 2-bedroom condo today in Toronto might actually not be too far off from a starter semi in Toronto. And so semis are much more affordable these days. The difference between semis and condos are cash flows. You can cash flow positive with semis, whereas condos are very negative still. So that's why Toronto semis for investments are much more desirable as a comparison here too. We've come down a lot from the $1.3 million purchase price in April to now slightly under $900,000. So it's actually becoming a lot more possible to actually buy semis in Toronto nowadays. Take a look at this chart that compares the days on market for these semis in Toronto. The red line shows the average days on market in 2021, and the blue line shows the average monthly days on market since the start of 2021. As you can see, the market was really hot at the start of 2021, so the days on market were well below the average. It then cooled a bit in the summer of 2021, going back above the average days on market. The cycle then repeated, and we ended up seeing another hot start to 2022 with days on market dipping down again, which was a result of buyer momentum picking up and the reason for the huge spike in prices in early 2022. But as we all know, once rate hikes hit in March, the market did do a fast U-turn and investors quickly moved to the sidelines. So the days on market went from an average of 13 days to 29 days at the quietest in July. September's days on market actually fell below the 2021 average, then October came back up a bit. Right now, we're definitely not as hot as early 2021 or early 2022, but the market is visibly trending up based on days on market, returning back to more of an average range. Now, we know sales have come down. We also know listings have come down, but sales actually fell more than listings, and so we were clearly in a buyer's market all summer long. Honestly, it's hard to tell what's going on if you just look at sales or listings on its own, and so a better metric to gauge overall dynamics is to look at the sales to new listings ratio, where you divide the number of sales by the number of new listings in any given month. Toronto semis are hotter than the general Toronto real estate market, where the average sales to new listings ratio for these investor semis are sitting at 74% compared to the overall average in Toronto closer to 60%. So basically anything under 74% means a slower than average Toronto semi-investor market, and anything above that is hotter. So things got pretty hot towards the end of 2021. We saw month over month of seller's market. And like I mentioned before, the strong momentum was what caused the massive price growth in early 2022. But just like the days on market turnaround, the sales to new listings ratio dropped like a rock starting in May, and I would say that we're just seeing more confirmation that things are improving based on the sales to new listings ratio. Right now, it's hard to say for sure that we're clearly out of the woods since we have only seen 1 month where the sales to new listings ratio is back at average levels. On the other hand, it is pretty visible that the markets are improving based on this indicator. But perhaps the most interesting insight is this last chart where we stack the selling price against the average mortgage ceiling for that month. Before rate hikes, I would say that not as many investors were being capped on the financing end. Instead, they might have been limited because they only had, say, $350,000 to invest. And so based on a 20% down payment, closing costs, and some renovations, their purchase cap might have been $1.1 million. In our current market, more and more investors are seeing a financing cap because of tougher stress tests. And this will be another force that keeps prices lower. What I did was plot the typical investment semi-financing cap in the red line, and as you can see, the purchase price was much higher at $1.05 million when the stress test rate was at 5.25%. But as interest rates started going up in March, eventually stress tests also got harder. Now we can stack the sale price on top of this mortgage cap to see what happened over the past 2 years. And as you can see, prices were sustainable in 2021 because selling prices were around the mortgage ceiling. Realistically, prices have to come back down closer to the mortgage cap for investors to actually be able to buy, and we're finally getting closer to this point. We've actually reached that in October, so this is another sign that properties are closer to more affordable levels. Just as a reference, the mortgage cap is calculated based on the 5-year fixed rate at that time, and I chose it because fixed rates typically have expectations priced in. And because fixed rates kept going up until around July, this is the reason the mortgage cap has been coming down. I did factor in improving rents over the past year, which did help to lessen the impact of rate hikes on the financing ceiling too. Because of this, the financing cap for investment semis saw a smaller 19% drop compared to the bigger difference in end user markets, which actually came down by around 25%. Right now, cash flows can still run positive, purchase prices are much more affordable, things are looking a lot more certain, and fixed interest rates are actually starting to come down now too. And all of these are reasons why the market is picking up again. I would say that if we aren't heading into the holidays, I would expect a bit more action today, but because everyone is slowing down, things are much slower than normal. If you're trying to catch a slower market, this might be the time before more competition comes back next year. But keep in mind, there's really not many listings out there from now until probably after these school holidays are over, which is the end of the first week of January. But there's always a chance that a good deal might pop up. So if you need help keeping an eye on the market for you, just reach out to our team. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto. When you work with us, we take the time to understand your needs, teach you the ropes, show you the deals, crunch all the numbers for you, and eventually help you buy the best one for you. But that's not all. Our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.